Welcome to my YouTube channel. My name is Mwangala Irene Mwalukanga. Today I'm looking at what it means to bounce a check. This is attributed to the number of questions that have been asked about what it really means to bounce a check and the consequences of bouncing a check, including what it really takes to bounce a check. So to that effect, I decided to come up with a PowerPoint presentation to look into what it means to bounce a check. Well, before I begin explaining what it really means to bounce a check, we need to understand what a check itself is. By definition, a check is a document which orders a bank to pay money from a person's account to another. So here we're talking about two customers, one with a check and the other one waiting to receive money from the issuer of the check. So the person that is receiving the money, in this case, is called the payee. So what one needs to understand is that a check has got a lot of information on it which needs to be understood. And here is an example of how a check looks like. So as you can see at the top here, this is a part in our Zambian context that consists of the check number, and also there's going to be a sort code for that particular bank there. We're talking about where the branch is held for the issuer. Secondly, there's this option, or I can call it a provision for a date. There's supposed to be a date there. The date in this case means the current date. You can put a date that is before the current date, but not a date that is after the current date. For instance, if you want to issue a check dated 19th, you're not supposed to input 20th, but you can put 19th or 18th, 16th, going backwards. But of course, it shouldn't exceed the period of 6 months if you're going backwards, because by then it's going to be referred to as a stale check, which won't pull through wherever it's going to go. Secondly, there's also this other option with a dollar sign. Here, it just means that you need to input the amount in figures. Well, the amount in figures and the amount in words are supposed to match. Secondly, the payee's name is supposed to come somewhere here. And when you look at this ribbon down here, it's going to have a transaction code. It's also going to have a check number. It's also going to have the account number. So having explained what a check is, it will now be easy for us to go straight into explaining what it really means to bounce a check. So, a bounce check is a form of payment that gets rejected and returned by a bank. Imagine you issue a check and the person who's supposed to receive it calls you and tells you, I was told the check bounced. You're going to ask yourself, what is it that I didn't do right? How am I going to know? I need to go to my bank for me to understand what went wrong. But to avoid all those inconveniences, just take the time to understand how a check operates. So we're going to look at reasons why a check can bounce. However, there are about over 70 reasons why this can actually happen. Due to the fact that we don't have all the time in the world to discuss 70 reasons, I'm only going to pick the 5 most common reasons why a check can bounce. To begin with, number 1, refer to drawer or insufficient funds. There are times when a person can issue a check on an account which has insufficient funds. We mean, for instance, if a check of 9,000 is issued and yet the account where it's being debited from has got an amount that is less than that, then the check is going to bounce. So if you're issuing a check of 5,000, for instance, make sure that the amount in the account is 5,000. Actually should be at least above 5,000, because in case a charge passes, not knowing whether it can be a monthly charge, even if the account is just less by 1 kwacha, the check is still going to bounce. Or even if it's less by 100, it is still going to bounce. we continue. A post-dated check. Like I earlier alluded to, a post-dated check. This is a check or a type of check written with a future date. Today is the 19th, but you write 21st, for instance. That check won't go through. Thirdly, most people would actually decide to put 21st. For instance, today is the 19th and they indicate 21st, fully being aware that they don't have money for today. Now, instead of informing the person that you're issuing the check to, you decide to not tell them and just give them the check because you know how much they're going to be frustrated and upset about you giving them a check that they can't cash out the same day. So the best that one can do is actually discuss with the person to say, well, I don't have money, but I'm sure I'm going to have money on the 21st. So I just issue a check dated 21st. Otherwise, if you just tell the customer or the payee in this case to say, here's the check, the payee doesn't have information to say, oh, post-dated check won't pass. He'll just take it, oh, he's given me a check, I need to take to the bank, and they'll take it, it will bounce. That is inconveniencing on the customer as well, because there's a certain period of time when a check has to be redeposited for it to be truncated. That is information that I'll explain in my next video. So already it can take about close to 5 days just the customer waiting unless you issue another check. However, there's an advantage to a post-dated check. Post-dating a check makes sense only if you're certain that the payee will not cash or deposit the check before the date appearing on the check. Like I explained, just discuss with the person and you will save yourself from credit or being shouted at for not having the money that is required. We proceed to other reasons. Amount in words and figures differ. I think I've explained this. But here, one needs to understand that when you're issuing a check or if you're receiving a check, make sure that the amount in words and the amount in figures match. If they don't match, it provides room for it to be bounced. So, for instance, you're issuing a check of 15,000 and yet the amount in figures says 15,100. The question is, which money are you really issuing out to the payee? It bounces. Already, the customer gets inconvenienced. Furthermore, drawer signature required. So every check that is issued has to be authorized by the person issuing it. If this never existed, for instance, anybody who picks a check would be able to go to the bank and issue it and the person would get paid. But there's that restriction where the owner of the check has to sign and the bank where it is going, the owners are actually going to the owners in this case, I mean where the person holds an account, they'll be able to check with their records to say, is this the owner of the check or not? If they do not clearly see the signature, it can also affect the possibility of the check being cashed. So they need to be sure, and even when you're signing, make sure that you stick to the signature that you use. We proceed. Payee's name required. So when you're issuing a check, there's always the name of the person who's supposed to receive the money that you write. Make sure that this name is written in full and is clear and is actually written. So if you haven't written the name, we don't know who we're paying because there's no one who doesn't have a name. Everybody has got a name. Even if it's a company, you indicate the company's name. If it's an individual, you indicate the individual's name. The individual's name or the company's name has to be very clear. Without this, the check again faces the possibility of it being bounced where it is going. Well, I've talked about the 5 common reasons that can lead to a check bouncing. Other than these 5 reasons, there are also consequences to bouncing a check, which we're going to talk about in the next video. Finally, we've come to the end of the presentation. I'll always end this with my usual quote: a knowledgeable person is an empowered person. Thank you so much for watching my video, and kindly remember to subscribe to my YouTube channel by clicking the subscription button just right at the bottom. Thank you so much.